Welcome back to another episode of Cryptoviser, where we talk about everything cryptocurrency, blockchain, investing, and of course, other news in the finance space. Hopefully you guys are doing well. We got some hot topics for today's video. I know this is going to be a hot topic. ADA and Solana are both inflating rapidly. And while that's going on, ETH and Binance are deleting coins. And then we're going to be talking about some investing, Bitcoin yield, Avalanche Crypto, AMC, Reddit, and some other cryptos as well. So first off, don't forget to give the video an absolutely free thumbs up. It's free to do, costs you nothing, and it helps get the video out to more people. And here we go. Guys, you may not agree with everything I say. That's okay. If you don't agree or you can't handle it, unsubscribe. That's the only thing that I could say to you guys. But if you guys like these discussions, hit subscribe and turn on notifications. That way you could be always notified every single time I upload a new video, which is every single day of the year, every single day since 2018. All right, so this is a hot topic. I've covered this on many previous videos, and this is the coin burning mechanism. So right now, Bitcoin does not coin burn. Ethereum does coin burn. Binance does coin burn. Solana, yes and no. We're going to get there in just a little bit. Cardano does not coin burn. Actually, the opposite. XRP does not coin burn, kind of the opposite as well. Avalanche and the others basically don't coin burn. There are some mechanisms that are coin burning, and there are some that have activated those coin burning mechanisms this year. Now, the idea of coin burning, yes, some of it has to do with the price, but the idea is, number one, that you are taking some coins out of circulation and therefore limiting the quantity that is supplied. So in the case of Ethereum, Ethereum's mechanism, its protocol, was inflating. So they would mint coins, but there was no hard cap. But that's not the only reason that they started the coin burn mechanism. Let's be very clear. Because guys, there's going to be a lot of people out here in the comments here, on my Twitter, everywhere, that are totally against coin burning. They have no good arguments. They have no real explanations. They'll be like, but Cryptoviser, the reason that Ethereum is coin burning is because they don't have a hard cap. Okay, that's kind of, yes, part of the reason. But the other reason is because the Ethereum mechanism now is a deflationary cryptocurrency. It's actually going down. It's burning more coins than the mechanism and the protocol are creating every single year. And we're going to go through the metrics on that in just a little bit. And Binance has been doing this for years. Every single quarter, they send some of their transaction fee, BNB, to a coin burn address, and those coins are taken out of circulation. So number one, this limits the supply, which does create some kind of value for the ecosystem. It also helps accelerate the price of the cryptos. Now, you guys may say, well, it's only for the price. It's only for the price. I don't agree. This is not the only reason that coins are being burned. And you know what? At the end of the day, in my view, if all the coins are burning to increase their market capitalization, right, and it's working, and you have one coin that's not doing that, what do you think is going to happen with that one cryptocurrency that is not burning coins? I mean, in my view, the coin price is probably going to go down in the market cap, or it's going to be outpaced by the coins that are burning their own coins. Now, the other argument that you're going to hear from these robots, literally, even if they're like humans, they are robots, okay? Because they just repeat the same thing that they're told. They don't have the ability to think, right? You're going to see these comments down below. The other one you're going to hear is, but Cryptoviser, whose coins are we going to burn? You should burn your coins, Cryptoviser. Okay, they clearly don't know exactly what they're talking about. And by the way, I usually block those people because it gets really exhausting. It gets exhausting hearing the same thing coming out of robots. So that's not how the coin burn mechanism works. So these people are trying to mislead you. And we're going to go through some of the reasons why they may be trying to mislead you. Because in my view, there's no reason that we should not be burning coins. But I'm going to explain why. Because a lot of people are like, but Cryptoviser. But they're not giving you the data. I'm going to give you the data as to why we should be burning coins in the Cardano ecosystem. And we're going to start here. So I'm passionate about this because, first of all, I don't care what happens, whether they burn coins or don't burn coins, right? But it says something about the ecosystem when all these other ecosystems are burning coins and increasing their market cap. And Cardano's like, no, 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 no. You burn your coins, Cryptoviser. How about that? Believe me, my coins are not going to move the market. Anyway, so $25,000 worth of Ethereum is being burnt every single minute. Another YouTuber put this up on Twitter and got a lot of kind of pushback from the community, I guess you could call it. But then I kind of dug a little deeper. There is a reason that we need this coin burn mechanism, and many of us, right, who watch my videos every single day, we're not even fully aware of this, let alone the new people or these robots that are saying the same exact thing on every tweet. But Cryptoviser, you burn your coins. How about no? That's not how it works. Anyway, reason number one, Cardano needs a coin burn mechanism currently. Guys, this is factual information. ADA circulating supply is inflating at about 1.8 billion, not million, billion with a B, ADA per year. Per year. So if you go to the Project Catalyst spreadsheet, you can actually see how the rewards are distributed from, I don't know, reserves in the treasury or whatever. So circulation of ADA at the time of 7/29, so that was July 29th of 2020, Epoch 208. This was the beginning of the Shelley. So this is when staking began. Some of you guys were with me at that time. Some of you guys were not. A lot of growth since then in the ecosystem, that's for sure. But we had at that point 3.111 billion ADA in circulation, and the rest were in reserves, right? The difference between the circulation and the max supply of 45 billion. But what happens every single epoch is more and more ADA is dispersed into the ecosystem. So we went from 31.111 to the end of November. Well, I'll just show you the full year. So that was 7/29. So I'm going to show you guys 7/29 of 2021. So this number is 32.936 billion now in circulation in July, end of July. So that means in 1 year, the first year of staking, the circulating supply increased by about 1.8 billion ADA. And if you fast forward till when this is updated in November 21st, so the end of November 2021, Epoch 304, there was 33.76 billion ADA in circulation, which means since basically August of last year, of 2020, to today, the ADA mechanism has increased by about 2.5 billion ADA in about a year and a half, a little bit less than a year and a half, but year and a half, 2.5 billion ADA. So you may be saying, but Cryptoviser, what's the big deal? Whatever. What do you think is happening to that ADA? All of the ADA that's being, I'm not going to say all, okay? Let me be clear. There are some great Project Catalyst, which is basically the governance fund for Cardano. There's some great Project Catalyst projects that have received funding from the Cardano ecosystem, but there's also a lot that we don't really know exactly what they're doing. Now, I'm not saying any of them are doing anything bad, but if you think about it, right, if you are a company that's trying to build something up, you may need cash. Now, you're going to get ADA. What are you going to do with that ADA? You're going to turn it into cash so that you can, pay people, buy whatever supplies you need or whatever. So there is a lot of sell pressure coming from this as well. And while all of these other mechanisms are decreasing their circulating supply, Cardano's is increasing at 2.5 billion every year and a half, which is about 2 billion a year, let's just say. Now, that's not going to go on forever, but even if it goes on for another 5 years, okay, that's 10 billion ADA. And then there's still going to be, a little bit less than 11 billion. Hopefully by that time, some transaction fees are going into reserves and treasury and all of that. But either way, that's still, 2 billion, even if it goes down to 1 billion a year, that's a lot of ADA. At $1, that's $1 billion worth of ADA that's just being created out of thin air. So when people are saying, but Cryptoviser, you should burn your coins, or Cryptoviser, we don't burn coins because the fundamentals of Cardano, and this is not everybody, don't get me wrong, this is not everybody, but they're not telling you that 2.5 billion ADA were injected into the Cardano ecosystem in the last year and a half. So that's important to keep in mind. And this is one of the reasons, I wrote reason number one, that we need a coin burn mechanism. Even if it's like 1% of transaction fees. And transaction fees are basically like nothing compared to all these other chains right now. But eventually, this mechanism is going to develop, and it's going to morph, and it's going to adapt and change, right? So whether we do it now or whether we do it in 5 years, in my view, Cardano mechanism will burn coins at some point, especially when you look at the rate that Binance is burning coins. So by the way, if you're up to this point in the video, give the video a thumbs up. I'm going to need it on this video because I'm going to be dealing with a lot of robots hitting the down vote. So give this video a thumbs up. Honestly, guys, are they going to burn coins? Probably not right now, right? But it's going to eventually happen. But this is really just kind of talking through why these venture capitalists, why these billionaires, why these people who are starting NFT projects are starting on these other chains. Because at the end of the day, like they're starting NFT projects for money. They're starting a DApp ecosystem for money. They're investing in the crypto for money. They're not just doing it because, oh, I like to see the clouds in the sky. Like they're not doing it for that. So we have to keep that in mind. Anyway, so Binance, as you guys can see here, in 2017, when they started the burn mechanism, they had just about 200 million total coins. Now they have 168 million, which is about a 10 to 15% reduction in 4 years. So you can see here, they are burning sometimes around 1%. It basically averages out to around 1%. Sometimes it's a little bit more, sometimes it's a little bit less, but it's around 1% of the supply. So if you're burning 1% of the supply, and I'm talking about maybe burning 1% of the transaction fees or 1% of the catalyst money that's dispersed. And there's people who are going to say, but Cryptoviser, don't you want all of that ADA to go to, these projects that are developing? Okay, where are these projects? I'm not saying that there's not some that have already done things and deployed projects, but where's the rest? There's been a lot of ADA that's been deployed in the last couple of years. Anyway, so this is in my view, like Cardano has to keep up. And we're about to talk about Solana because currently Solana is also inflating. And a lot of people don't realize this either. All right, I had to pause the video because I didn't even see the Solana stuff that I pulled up. So Solana actually has an inflation schedule as well. I didn't realize this. So sorry about all the ads on this, but this is a great example that that talks about Solana's supply and Solana's inflationary rate. So let's kind of talk about it. Solana does not have a fixed max supply. Instead, what is fixed is the inflation rate year over year. The current total of supply of Solana is 504 million, a little bit more than 504 million Solana, with a circulating supply of 296 million SOL as of September, right? So we're a few months delayed, but it doesn't matter. When the Solana network first launched, it had an initial total supply of 500 million SOL. However, Solana Foundation previously burned 11 million SOL. This reduced the total supply down to around 488 million. And that is not the maximum supply because there is an inflationary schedule, which we're going to go over in a minute. With the new SOL rewarded as Solana's staking yield, Solana's initial inflation rate is 8%. This inflation rate will reduce 15% year on year until it settles at what Solana described as the long-term inflation rate of 1.5%. According to Solana Beach, Solana's total inflation is currently 7.07%. And the Solana inflation rate will continue for about 10 years. From Solana's inflation proposal, the total supply of Solana will reach 550 million after 2 years. By the 8th year, it should hit 700 million. After reaching long-term inflationary rate, obviously it's going to decrease to 1.5, like I just said. And this is on Solana Docs. If you go to their website, Solana documentation, and scroll down to Solana's proposed inflation schedule, shows it right here. It says a large portion of the SOL issued via inflation will be distributed to stakeholders in proportion to the SOL that they staked. We want to ensure that the inflation schedule design results in reasonable staking yields for token holders who delegate SOL and the validation service providers. Now, we have to keep in mind the Cardano, a lot of that reserves is going to staking rewards as well. And these staking rewards that are going out, what are people doing with them? Now, some people are restaking them, some people are selling them, or some people are flipping them into other cryptos. And we have to keep that in mind as well. So as much as we're excited about the total ADA in that is being staked to the ecosystem, we have to also keep in mind that the circulating supply is also increasing by the day. Anyway, back to Solana. Yield throttling is a current area of research that would impact staking yield. It's not in consideration in the discussion here or modeling below. Overall token issuance, long-term steady rate estate inflation, yada, yada, yada. Okay, so based on these considerations and the community discussions, the Solana Foundation proposed the following inflation schedule parameters. So the initial inflation rate is 8%, then disinflation rate is going to go 15% year over year. It's going to decrease by 15%. And then the long-term inflationary rate after 10 years is going to be 1.5%, meaning the entire supply is going to continue to increase like that. Now, you may say, see, Cryptoviser, you don't need this, but they haven't said yet whether they're going to burn coins. In my view, they're probably going to. We've already seen the Solana Foundation from that previous article. They've already burned 11 million coins. So what's to stop them from burning more coins or just submitting a new proposal to burn more coins? This is what is going to happen, especially as these coins lose rank. We're still in a bull market, right? If we are in a bear market, and you guys will know when we're there, right? But if we are in a bear market, this is a mechanism that these crypto protocols are going to implement, whether it's during the bear market or whether it's towards the end of the bear market, towards the next halving cycle, because the coin burning will help accelerate the price. Some people are going to say, but Cryptoviser, Stellar, burned 50% of their coins. Yes, and those coins were not technically in circulation because they were under Stellar Development Foundation control, and Stellar Development Foundation wasn't really doing anything with those coins. So a lot of the mechanisms, a lot of the sites that were reporting on their market cap were not including those 50 billion coins in the circulating supply. They were putting that in their max supply. And when they were burned, it just came off the max supply. But the market cap goes based on the circulating supply on many of these major platforms that track the price. But the other thing is, you guys know, I feel that Stellar is highly, highly, highly undervalued. And a lot of the coin burn happened in 2019, and then we had the pandemic in 2020. And then a lot of people forgot exactly what happened in 2019. We also had all these new DeFi ecosystems popping up, the NFT, and a lot of money and value moved to these new protocols and new systems. But I think what's going to be happening as we rotate towards the end of this bull market is we're going to see those adjust. And I think Stellar is going to perform, because right now, you're right, it is underperforming. But anyway, so Solana has an inflationary mechanism. Cardano currently has an inflationary mechanism. Now you could say, but Cryptoviser, that's not the hard cap. Yeah, but we don't consider the hard cap when we're talking about market cap, when we're talking about circulating supply and all of that. This is based on the circulating supply, not the max supply. So Cardano is increasing. I don't know what the math on that is. 2 billion a year out of 32 billion. 1/16, which is, I don't even know what the percent, but you guys kind of get it. I think based on BNB, okay, burning 1% every single quarter, So that's basically 4% compounding a year. And you can see the market cap has gone up substantially. Do I think that this has all to do with the coin burning? No. But does the coin burning help maintain its position in the top 3 coins? Absolutely. I don't think anybody can argue that. And this is why we are seeing the ETH mechanism burn. Remember, Ethereum started burning coins back in the beginning of August. And since then, I'm recording this basically in the middle of December. So August, September, October, November, 4.5 months. And already 1.2 million Ether has been burned for a total value of almost $5 billion. So that's about 2.5 million Ether per year. There's people who are going to say, but Cryptoviser, it has no max supply. But as I've been saying, and you guys may not be able to see this. Let me pull it out so you can see the graph a little bit better. But right here in at the top, this is burned coins per day on the Ethereum network, and this is net issuance per day, how many coins are minted. And you can see pretty much since October, are now in a deflationary environment, meaning more coins are being burned on this upper chart per day than are being minted in this lower chart per day. So that is a positive, metric that we're seeing here. And we're seeing the same thing with Binance. And most likely, in my opinion, what we're going to see is at some point in the near future, Solana is going to make this transition and say that they're basically going to start burning coins. I don't see how it can't happen. And I think that the Cardano community needs to think about this because we can lose rank very rapidly. And when you lose rank, if that is not the top story and another coin pops up and that's the top story, people forget about Cardano. And I've seen this happen with so many different cryptocurrencies. Look at Litecoin. I'm still super bullish on Litecoin. I mean, the amount of, I do kind of what Raoul Pal does. If everybody in the community is like, oh, Litecoin shit, don't talk about Litecoin, don't let me hear about Litecoin, don't invest in Litecoin, that makes me want to do it even more. Just like this whole Cardano community, well, not the whole. I want to be very clear. Like when I say this, I mean like the troll bots, right? When these troll bots like really like, oh no, we can't burn coins, that makes me say like, okay, we need to burn coins. Like why is there so much push against not burning coins? And then the repeating and the robots and all of that, like it's like, why not? Like that makes me want us to do it even more, right? And by the way, Ethereum's doing it, and the price of Ethereum has increased since this mechanism went into effect. So the EIP 1559, which is the burn mechanism for Ethereum, that went into effect essentially, like I think it was end of July, early August, and you can see right here that the price bottomed right here at about July 20th, 1 week before EIP 1559 went into effect and the coin burn mechanism began. And then you can see we have just been going on an upward trajectory ever since. Do I think that this has all to do with the coin burning? Of course not, guys. Like Ethereum is a great crypto and blockchain ecosystem. They have a lot of DeFi and dApps on it. There's a lot of adoption. There's a lot of other blockchains built on top of it. You guys know all this. I'm a layer one maximalist. Like I hold Ethereum. Am I going to sell? Probably, but I'm going to pick some more back up, hopefully, if the price goes back down in a bear market. But I am a layer one maximalist. And I think what Ethereum has done with this burn mechanism has helped accelerate the price. I think that if they didn't do this burn mechanism, we would not have the price appreciation we have. And I think this was kind of like a holdover until ETH2, right? Because if they didn't have it, everyone would just be saying, where's ETH2? Where's ETH2? Where's ETH2? Now, you guys can say, like, and it's a valid argument to say, well, Ethereum just did that to, keep it where it's at. Yeah, that's what these mechanisms have to do, right? Just like stocks, just like publicly traded companies. If one of their think about trading before the pandemic. If you wanted to like trade stocks, I mean, sometimes it would cost $15 a trade. And then one of the brokerages said, no, we're going to do it for free. And then the other one said, okay, we'll do it for free. And the other one said, we'll do it for free. And then now you could trade stocks for free, right? In fact, a lot of these companies will give you stocks to sign up on their platform. So they do that, right, during these markets to get more people in the market and get more people to understand, because what's the biggest way to learn about a crypto? It's to be in the crypto, right? Because then you have skin in the game to learn about it and make sure you understand all of the mechanisms that are involved. So anyway, I am a layer one maximalist. So I hope that every single one of these top cryptocurrencies succeed. And I hope that you guys do too. But yeah, there's going to be competition, and like all these mechanisms, they have to be nimble and be able to adjust and go with whatever's going on at the time. And I'm not saying like change the whole protocol could potentially harm the protocol, but taking 1% of fees of 1 ADA or whatever it is, every single transaction is not going to affect you, and it's not going to affect the network. In fact, it's going to Why would somebody holding ADA be so against a mechanism that's going to increase the value in that ADA? And for the people who say, but it's not going to hold it long term, Binance has been doing it since 2017, and look at where they are. Ethereum just copied them. And Solana's going to do the same thing. So I would rather Cardano do it now, which is probably not going to happen just because of all of the resistance from the community. But it's going to happen. Maybe next cycle, maybe the cycle after that. So we're going to talk about it because it's important to talk about these mechanisms and the fact that the circulating supply of ADA is increasing, and that's something that we have to think about as holders. Because if I hold for another 4 years, is my value going to decrease, even in the long term, because the mechanism is inflating, not deflating? I don't know. Where in Solana, while the mechanism currently is inflating, do I believe that Solana will start burning coins? There is nothing anybody could say to me that would make me think Solana is not going to do this. Unless Solana actually came out and said, we're not doing it, I wouldn't believe it. They are going to burn coins. 100% they will burn coins, probably shortly, soon. I would guess they will probably do it either before the next cycle, and if earlier than that, probably if they start losing rank in the top charts, because the venture capitalists and the billionaires, they do not care. They want their value to go up. And if the value of the crypto goes up, they reinvest in the ecosystem, and then the value goes up more, and then they reinvest. And some of that reinvesting is burning coins, right? It's just part of what has to happen. And it's not their coins that they're burning. It's transaction fee coins. It's reserve coins. It's whatever. So yeah, that's kind of my view on it. All these mechanisms are going to do, every single one, especially the ones with billions of coins, because they're not going to be able to keep up. Now, maybe I'm completely wrong. Maybe next cycle, we're not going to see any money going into these high-valued cryptos like Bitcoin and Ethereum and Binance, because they're just going to be too expensive. So we may see just the next whole cohort of investors. I mean, think about it. If we're in like next cycle over $100,000 in Bitcoin, almost no average investor jumping into crypto is going to buy Bitcoin. Almost none. Almost none. This is going to be super elite and institutions and corporations, possibly even by next cycle, right? And that is crazy to think about, that we may be in next cycle and people cannot afford Bitcoin. And that's just next cycle. Think about the cycle after that. If we get to 200,000, 300,000, it's going to be all corporations putting money in, and it's literally going to be out of the reach of the average person. And that's crazy to think about. So yeah, I mean, there's positives, there's pros and cons to both. So you got to think about it and look at all of these coins and look at the ones that are burning coins. Don't compare these altcoins to Bitcoin. Nothing is Bitcoin. Nothing will ever be like Bitcoin. Altcoins are altcoins, right? So I look at Bitcoin completely separate, because there's a lot of people who say Bitcoin doesn't burn coins, or Bitcoin burns coins when people lose their coins or die and they lose their coins. True. But you can't compare Bitcoin to any other cryptocurrency, including Ethereum, including Solana, including Cardano, and including Binance. You cannot compare Bitcoin to it. You can compare number 2 through whatever. You can compare all of these, but not with Bitcoin. That's my view on it. So anyway, let me know your thoughts. I know that we went on a ton about this, but honestly, I want you guys to like hear my opinions on it and my thoughts on it. I know there's a lot of people who probably did not watch up to this point and just downvoted the video and said, "Oh, I can't believe Cryptoviser's talking about burning coins." And these are the people who are going to lose. These are the people who are going to lose, because they're not able to even think outside of their, their beliefs, or what they are, think about a certain thing, whatever it is. And I try on this channel to think about both sides, to think about both the pros, both the cons, this is what we do in investing. Like this is what I don't understand. People are like, "Oh, but I don't think that we should do that because that doesn't make me feel good, or that doesn't look good." I'm like, it doesn't matter. Like we are so small in this overall crypto ecosystem, right? We have to think about what is the most likely outcome, right? So for Ethereum, the most likely outcome is it's going to continue to burn coins at probably a faster clip. All these people complaining about fees and all of that, The Ethereum developers don't care. They don't care. Like they don't. Obviously, they care and they want things to be resolved, right? But as the network becomes larger, right? They don't want everybody on layer 1. They want you on layer 2, layer 3, layer 4. And they want their value going up. That's why they don't care that fees are high. Because when fees are high, that means there's going to be a lot more money for the miners as well. Now, when it moves to proof of stake, obviously it's going to be a little bit different, and we're going to have to see where that goes. But this is what people want. They want value out of the ecosystem so that they can spend their cryptocurrency if it's like a payment, or so they could have, future value and wealth. I don't know anybody who buys into crypto and says, like, I don't want my value going up. Of course, we want our value going up. We have to think about it like that. We have to think about, if they implement smart contracts, is that going to make our value go up? Yes. If they implement a DEX, is that going to make the value go up? Yes. If they implement, with a bank, integrate with a bank, is that going to bring the value up? Of course. If they integrate with a government, will that bring the value up? Yes. But it has to be on layer 1, in my view. And we have to think about that. And because that's what the developers are thinking about. They're thinking about layer 1. How can they protect their layer 1? Anyway, we talked a lot on that. I want to know what you guys think down below on Binance, Ethereum, Solana, and Cardano. Do you think that it's a big deal that we're inflating 2 billion ADA per year? I mean, it is part of the protocol, so it is what it is. But did you even know that? Let me know down below. Don't forget to give the video a thumbs up. Let's move on to some other cryptocurrency news. MicroStrategy's Michael Saylor lays out ways the firm could generate yields from its massive Bitcoin holdings. I don't think that he's getting worried, but I think that MicroStrategy will sell some of their Bitcoin. There's a lot of people out here that think that they're not going to, if we had like a parabolic run. I don't see how they won't. Even just some protection. Obviously, the only reason I think that they won't is because people would lose confidence, right? They would be like, wait, why is MicroStrategy selling some? But at the end of the day, it's about money. Like, goes right back to, they took out debt. They owe people money for that Bitcoin. So obviously, I think the bonds expire in 2025, so it's halfway through the next halving cycle, like after the halving cycle. So we'll hopefully be in a bull market at that time. But what does that tell you about then? Are they going to sell some to make some profit? Probably. Maybe early on they'll sell some and then they'll buy some back a little bit later just to pay the debt. I don't know. We will have to see about that. But anyway, let's hear what he says. MicroStrategy, which makes business analytics software, but whose market cap largely reflects its Bitcoin holdings, owns 122,478 Bitcoin. Those Bitcoin were purchased in since the third quarter of last year for roughly $3.7 billion and are now worth $5.8 billion. To generate income from its Bitcoin, MicroStrategy could lend some of the portion to a trustworthy counterpart, according to CEO Michael Saylor. He said the company could also put its Bitcoin in some form of partnership with a big tech company or bank. You could think of it as putting a lien on it. MicroStrategy might also look out for mortgage against its Bitcoin, generating long-term debt under favorable circumstances. Finally, MicroStrategy could develop some kind of interesting application for its Bitcoin, according to the CEO. He noted this in a presentation that no formal steps had been taken out of any of these potential initiatives. But yeah, people are asking, like, what if we go through a bear market? What are you going to do? Well, bear markets, people still make money, right? And lending and borrowing can still happen. And if we still see inflation surging through next year, this is also going to devalue the dollar, which could offset with increases in prices of other assets like crypto, like gold, silver, housing, and stuff like that. I don't know. Housing is part of like the old financial system, so that's probably going to come crashing down soon as well, especially if they start raising interest rates to fight inflation. But remember, whatever the Fed does, there's going to be a lag. So if they start, if they raise rates tomorrow, we're not going to see the result of that probably for a month or 2 months. And then if they raise again, we're not going to see the result of that for 2 to 3 months from that point. And it just keeps pushing things out. So they never actually resolve the issue because they're addressing metrics based on months ago and the things that they did months ago. So it's very hard to kind of keep up and catch up. from a very high level kind of financial perspective. Anyway, next up, AMC says over 1 million people watched the new Spider Man movie at its US theaters. This is after a year and a half of pandemic related shutdowns, people not wanting to go, and all of that. But AMC said on Friday that nearly 1.1 million people watched Spider Man No Way Home in its theaters in the United States, a record opening for a movie across the theaters in December. Um, that's pretty crazy. I mean, I've been seeing a lot of the characters from the movie on like different shows, like promoting it, which is very interesting. But also AMC, I told you guys, like they had to do something. I said this in about January. I said, I don't know what AMC and GameStop are doing. They have the perfect opportunity to take this whole meme stock thing and transform their business. And we're seeing that with AMC because AMC is starting to accept cryptocurrencies and do more like fun stuff, while GameStop is kind of just sitting on the sidelines and doing nothing. This was the single highest number of people watching one movie on one day at AMC US theaters during all of calendar years 2020 and 2021. I guess that's not a big record because the last 2 years was they were shut down, but it's showing that it's increasing, right? And this is very positive for the movie chain. The other issue in the last year and a half is that there were no new movies out, right? And all the new movies that were out were kind of crappy. Anyway, also in the meme stock news, Reddit jumps on IPO bandwagon with confidential filing. This is from December 16th. Reddit, whose message boards became the go-to destination for day traders during this year's meme stock frenzy, said that it confidentially filed for an IPO, initial public offering, with US securities regulators. Reuters first reported on Reddit's IPO plans in September. The social media company is aiming at a valuation of over $15 billion at the time of the flotation of that news. So we will see what happens with this. Obviously, I say, guys, just be cautious with a lot of these IPOs. Typically, IPOs will jump on listing and then they go down in the weeks and months after consolidate for a while, because when they first list, they have all these shares that they can sell, and they will, and that is that kind of puts sell pressure. So I would wait a little bit and kind of see what goes on with it as well. Next up, Avalanche eyes a 60% rally as AVAX price breaks out of bull flag. So we've been talking about Avalanche for quite a while. It has broken into the top 10 just recently, and you could see $114. Did you buy the dip? I wish I did. We're kind of like towards the end of the bull market, so I'm kind of being very cautious with what I'm buying. But you can see that in the end of last month, we went up to $145. Then we came down, hit $77 in the beginning of December, middle of December, about $77, double bottom. And now we're up to 114. So you can see we almost doubled. We went up about 50% in just a few days. We may come back down, retest, but it looks pretty solid of a chart here on the 1 month. If we pull back a little bit more, the 3 month, you can see that it's setting up really, really nicely, kind of this upward correction, consolidation, and probably going to go back up. But definitely some crypto to keep your eye on. Dubbed the bull flag, the pattern emerged when the price consolidates lower sideways between two parallel trend lines on the flag after undergoing a strong upside move. Later, in theory, the price breaks out of that channel range to continue to the uptrend and tends to rise by as much as the flag pulls height. AVAX went through a similar price trajectory across the last 30 days, containing a roughly 100% rally to nearly $150, followed by a 50% flag correction to $72 and a breakout move above the flag's upper trend line, which is $85 on December 15th. So we will see if we're going to hit new all-time highs. I would imagine that we probably will reach new all-time highs before we reach, some new lows, at least for the couple of months, because there's a lot of activity in Avalanche. You can see this long consolidation period in the middle of the year. and then strong upward trend. There's a lot more venture capitalists talking about it, billionaires talking about it. So definitely a crypto that I have my eyes on for dip buying, at least in the near term. Again, I'm recording this in the middle to end of December. Do your own research, not financial advice. Next up, crypto custodian BitGo adds AVAX support as institutions eye avalanche, just like I've been saying. Crypto custodian BitGo will support AVAX, the native token of Avalanche, and the latest sign of institutional interest in the high-speed blockchain. The news from BitGo comes after Bank of America analysts said Avalanche could be a viable alternative to Ethereum for DeFi, NFTs, and gaming. It also opens the door for BitGo clients, including exchanges Bitstamp and BitBuy, to offer AVAX to their clients. BitGo said, this is the president, John Wu of Ava Labs. He said, not only is BitGo a trusted and allows us to provide more access to our native token Avalanche, but given the enterprise push and the institutional support for Avalanche, this really is a powerful company to partner with. And we also know Deloitte chose Avalanche as their disaster relief platform blockchain. MasterCard has also tapped Ava Labs for its crypto accelerator program just earlier this month. So a lot of institutional interest in Avalanche. Again, we have to be able to think about what these things are going to do. Is Avalanche going to maintain these highs? I don't know in the long term or even the medium term, but in the short term, I definitely think that we can hit new all-time record highs. Not financial advice. Do your own research. So yeah, if it really just has a little bit more to go, and then it's going to be flipping XRP and Cardano, and that will be I don't know. Maybe at that point we'll see a coin burn. Maybe we won't. That's what I'm saying. Like we got to think about the coin burn before it becomes like a panic move. Because if it becomes a panic move, everyone's gonna be like, "Oh, that's a red flag for Cardano." But if we do it while we're not panicking, right? I mean, think about it, right? Even if they said 10% of transaction fees for the first 10 years, and then it'll reduce or whatever. I'm telling you guys, yeah, I'm telling you, we'll see. We will see. And by the way, the people that don't say coin burn or saying no coin burn, wait till a bear market. They're going to be begging for a coin burn. But at that point, you can't really implement it because it's not going to do anything. This is the time. This is where we're seeing institutions adopting cryptos. This is where we're seeing these crypto projects making huge protocol changes and adjustments that the community is totally behind and supports. And I think that at least starting the discussion about this is important, not only for Cardano, but also for Solana and all of these major crypto projects in the top 20, which is what we focus on this channel. Not really worried about the crypto prices. I think the next couple of weeks is going to be very fun and interesting in the markets as we exit 2021 and enter 2022. And if you guys watched my video yesterday, I got Marcus with a K's Cash App and sent him some money. Thank you, Marcus with a K, for always watching the videos and commenting on every single video. And to all of my loyal viewers who constantly watch and like, subscribe, give the video a thumbs up. Thank you, thank you, thank you. I hope you guys are having a great holiday season. Let me know your thoughts on everything we covered today. Remember, these are just my thoughts and my opinions. We could disagree. That's totally all right. Give the video a thumbs up anyway, and I'll see you guys in the next video. Invest responsibly. Do your own research and crypto wallet.